What's up, guys? Mike Sharp here. This is Sharp Investing and not investment advice. I am on holidays and I just thought I would do a video on flow traders just because I felt like talking about it. I'm sorry for the sound. I don't have my microphone with me, so hopefully the computer speaker is fine. All right, so flow traders, I haven't done a video for quarter 4 or quarter 1, so I'll do a little bit of both in this one. Starting with, maybe I'll just do a quick overview of the business in case you haven't heard of it before. Flow Traders is a market maker. They're a liquidity provider, mostly for exchange traded products. They started mostly with ETFs in Europe for equities, but now they've expanded they've been diversifying and growing the business over the last number of years to include fixed income, and currencies, and also crypto, that's the product. They've had product diversification. They're also expanding geographically. They're expanding their footprint in China and Asia, which are the markets of the future, most likely, and in the US, which is the sort of big daddy of them all, right? So if they're going to grow significantly, a lot of that's going to have to come in the US. But yep, they've been growing under the hood for a number of years now. Their earnings are all over the place. Basically depends on the VIX. Historically, it's dependent on the VIX. If the VIX goes up, usually that means the stock market is falling pretty quickly, and they make tons of money in that because the spreads widen and the volumes pick up. Whereas in low VIX environments where the market's just kind of grinding higher, they make a lot less money. They have very high operating leverage, which means that most of their costs are fixed wages. So as net trading income increases, earnings increase very quickly. And if you have a very low volatility environment, basically your earnings come down pretty significantly. But I haven't seen a situation where they've actually lost money yet. So it seems like they make money in all markets. They just make a lot more when there's something crazy going on. So quickly on 2024, they made $49 million in operating income, and that's down significantly from the previous year, which is $162 million. I think, and that's from what I was talking about, the operating leverage is very high, and also because they are interest rate sensitive, right? So they have a floating rate debt on their trading on some of their trading capital, and so as interest rates go up, a lot more of that goes to financial expenses, right? And you can see here that they had $75 million more in financial expenses in 2023 than 2022, even though their gross trading income was down by $100 million to $577 million. So they are counter-cyclical in terms of the stock market. So stock market up, bad; stock market down, good. And they are interest rate sensitive. So if you get a situation where you have a high volatility and interest rates come down because, let's say, the Federal Reserve and the ECB lower interest rates quickly to deal with a crash, that's sort of the magic combination that would allow them to make a lot of money like they did in 2020. They made over €8 in income that year. So maybe it was more like 10. I can't actually remember, but they did really well in 2022. And so that you can see that's the sort of dream scenario. So if you believe that there will be a stock market crash, or there'll be maybe not even a crash, just like a really severe bear market, 2022 wasn't very severe. It was just sort of a slow grinding down. But if you get one of these, they could have quite a good year again. Also because the company is quite a lot bigger than it was in 2020. Because they've been building it in the background, as one of their strategic priorities. So if we look again at 2023, if you have more normalized interest rates, they probably would have been more like 120 million in earnings. If we do some quick calculations here, the current market cap is 880 million, which means that on operating income, what's that? That's about 17 times operating income. The previous year, they're only trading at like less than 7 times operating income. So I consider 2022 like sort of a more normalized year. The VIX was medium, and they made quite good money that year. One more stat I think we want to look at is free cash flow. Now, the depreciation and amortization, it's not a great metric to use for them, because in order to grow, a lot of their growth comes through acquisitions, right? And amortizing goodwill is not really it's not really something you need to replace the same way as like if you're depreciating equipment on a different type, like a manufacturing business, whereas the depreciation is pretty relevant to the business model, whereas amortization isn't really that relevant. A lot of their investment comes from software, developing their software, because that's actually the guts of the business, and purchasing other businesses. So if you look here, the free cash flow was about 55 million. We have to keep in mind that these stupid accounting rules put the lease costs down in the financing section, which I don't agree with. So a normal free cash flow calculation wouldn't capture that, because it's just operating cash flow less capex, but then the lease costs are outside of that calculation. So I'm going to remove that from this calculation as well. And the free cash flow for last year was about 55 million, which means they're trading at about 16 times free cash flow, that's pretty good considering 2023 was like, it's basically a low year. That's a bottom year. To me, that's sort of the minimum they're going to make in a year. And if I'm owning at 16 times free cash flow, that's not a bad level to hold and sort of wait. If we look at quarter one, now this quarter one is quite interesting actually, because you can see here they made over €1 in earnings in one quarter, which is more than they made all last year. They had 46 million in net income here. Last year, I think it was 36 million or 39. So they've actually made more money in the first quarter than they had all last year. So I was talking about how their earnings can bounce around. Well, they've also already started bouncing in the other direction. And if we look at what the CEO said, he basically said most of this came from crypto. So previously they have a sort of, I forget what they called it, but like a strategic investment fund where they're investing in small businesses, and a lot of those have been crypto businesses, these little small crypto. And I was thinking before, like, this is stupid, right? Why are you investing in crypto? And the truth is, they've proven me wrong here in that, because Bitcoin was up, Bitcoin ETF got approved by the SEC, which means that a lot more money is flowing into that space now, because a lot of people who couldn't invest in it for institutions and such are actually able to, and say mom and pop investors, right? People don't want to open a crypto wallet and buy Bitcoin, but now it's a legitimate ETF, and you can see that the volumes have spiked in the first quarter here. Let me see if I can pull it up. But the value traded is up to 157 billion in the first quarter, up from 15 billion the quarter before, and that's primarily to do with that ETF. Now, and so what? So what Flow Traders does is they make money on the spread and providing liquidity to those transactions. So just the increase in liquidity, or the increase in volume, has really impacted their bottom line. Now, if we look forward, the Ethereum ETF looks like it's going to be, or not the ETF, but ETFs for Ethereum look like they're about to be approved as well. And so we could see those coming later in the year, which will add more investment in the space, which means they're positioned to make more money there. Now, the other interesting thing here is, I think this is sort of a paradigm shift for flow traders, because historically, flow traders, when the stock market goes up, they don't make much money, and when it goes down, they make more money. But the way crypto works is, well, currently at least, it just looks like a leverage bet on technology stocks, right? So if the NASDAQ is up, Bitcoin's going to be up multiples of that. And so we actually have a scenario now where they can make money in up markets through this mechanism. And I'm really interested to see how quarter two goes, because if they can actually make decent money in up markets. Again, we're up in Q2. There hasn't been much volatility, but if they're making money in Q2 and they get another, I don't know if this is going to happen. It's really hard to forecast their earnings, right? Like I don't even try. But if they can make another €1 in Q2, annualize those earnings, that's €4, and the thing's trading for 20, right? I think the market might go, oh, this is different, right? This is a different scenario where they're actually making money now in all markets. So I'm really curious to see how that goes. Incidentally, on a related topic, the VIX was actually down year over year in Q1 versus Q1 last year, and that just lends more. I don't know what the word is, but it puts more weight behind the things that I'm saying. That in core, maybe they're more diversified now in terms of the markets they can make money in. I think in terms of capital allocation, if we look at the return on trading capital, it was 84%. They annualized that number, so that's the net trading income annualized. 84% in the first quarter. And so my question to the company is, why are you even paying a dividend, right? They talk about how they have to strategically deploy their capital because they don't have enough trading capital to do all the trades that they want to. So they have to pick the most valuable ones and allocate the money there. But at the same time, they're taking 50% of their earnings and they're distributing them as dividends. And so if I was to ask you this question, if I said, I can get you 84% return on the money you give me, like how much money would you give me? And the correct answer is all of it, right? Like I can't get 84% anywhere, right? So why are you paying me the money to do my own investing, right? Why don't you just keep it and you deploy it as trading capital? So if CEO Mike is watching, you might just want to keep that money. I don't think that maybe the owners, maybe some of the insiders want the dividend just for cash flow. Maybe that's the reason. From a capital allocation perspective, it doesn't make a lot of sense to me. And maybe I'm missing something. If I am, please write it in the comments. Speaking of dividend, I think that we should just go over what we're looking at here. For me, like this position it's kind of a counter-cyclical position, right? It's not a cash substitute, but it's sort of like that for me. So if we ever have a market crash, I think flow traders would do really well, and then I can take the money out of flow traders and deploy it into something that's super beaten down. That's the theory anyway. And then in the meantime, I get a business that's growing. It has really good profit margins, and I've been collecting dividends as well. Last year's dividend was not great, but if we look forward, they're already going to be paying out 50 cents in dividends just from this first quarter, which means a 2.5% dividend just on the first quarter. So again, if they make €4 this year, that would be a €2 dividend, 10%. If they even make €2 overall, so they only have to make one more euro, then the dividend rate is 5%. So it's basically a position I could just leave and collect some dividends on and wait for something to happen. If we ever get the spike in VIX, then the company would do really well. So I think that's it for the video. Just wanted to update on this. It's a bit of a weird company. Again, like I said, it's really hard to anticipate what earnings are coming, but I do know that if something terrible happens in the world, probably they're going to make a lot of money. So I would leave it there. I'm going to go back to enjoy my holiday, but I'll catch you in the next video, guys. Thanks.